Does anybody have any questions to start off with? No? Okay, well I do. Isn't that funny? So I'll just warm them up. And in actual fact, I've got a question for Lukman, first of all. So Lukman, we've heard about MasterKey, we've heard about Dubizzle. Now it's time for Property Finder. Obviously, Property Finder has been at the forefront of online property advertising, but with so many other companies entering the online market, what is Property Finder doing to differentiate itself from the competition?
It's not just one thing. I wish it was just one thing. We're investing massively into technology. We invest massively into marketing. We're investing heavily into our client relationships. As Anne said, it's an ongoing process. We're investing also into trying to police our content and educate the market, both the sellers as well as the agents, and trying to raise the bar in terms of improving the user experience and increasing the transparency in the market. So yeah, a lot of things.
Perfect. Okay. And Zara, question for you. Real estate brokers are often seen as just money-grabbing, commission-lazy individuals. Ooh. How can we improve our image?
We need to be setting our standards in line with not just Dubai standards, but worldwide standards. So if you look at customer service delivery, for example, whether it be in the US or in Europe or in Australia, that all differs throughout different industries. But within our own real estate market, we need to be lifting the game. And we can be doing that obviously in line with the authorities. We can be doing that in line with each other. And I think in terms of raising the games, and some of the points that were brought up before with other real estate friends in the market were very important points. It's not only about setting these new initiatives into the marketplace, it's about policing them. So, we can all come up with a good idea, but if that's not actually being controlled or reported or marketed, it does have the opportunity to fall apart and not actually become effective. So,
okay. Does anybody have any questions?
Good afternoon. My question is to Lukman regarding the holiday homes legislation. How would it affect a person's ability to list his property for rental on yourself, on Dubizzle, and so forth?
I think we have 500 listings. To my understanding, they do have to have that, I don't know exactly what it is, but that new legislation that came in, all the companies that list there need to have that license in place. It's not a major focus of our business. To be honest, holiday rentals is not something that really we focus upon. We're more focused on sales and long-term rentals, residential and commercial.
So there hasn't been a sort of law passed to you from an executive saying anybody who wants to list, it's now illegal to list. You haven't had that kind of
Yeah, I believe that communication has gone out. It's not actually my division, but that communication has gone out and the license are being requested. That falls under customer care. But again, it's not a massive part of our business model, to be honest.
Thank you.
Any other questions? I wanted to turn to Jean-Luc. When the bubble was forming, sort of in 2013, the government stepped in and put in certain measures to, if you like, deflate the bubble by limiting the credit, if you like, that the banks could lend. And now, we have to put at least 25% down as cash. Given the slowdown in the market that we find ourselves in the secondary market now, I'm going to be a bit contentious, but do you think they should step in now and try to inflate? Because we would all like a little bit of a bubble forming, wouldn't we?
For those in the audience who aren't aware of this, in 2013, tail end of 2013, two significant milestones in the market. Transfer fees at the Land Department doubled from 2% to 4% in the October. And in the October, it was announced there would be a cap on mortgage lending. So in the past, where expats, as an example, would borrow between 85 and 90% to buy a property, that was capped starting from the 28th of December 13. So we saw a spike in mortgage sales in Q1 14, and that was as a result of people who had applied for pre-approval in the latter part of 13 using them in Q1. After that, we saw a significant slowdown in mortgage sales, and hence the idea between both of those initiatives were to slow this market down, because from the crash or the major correction that we had in 08-09, the market had recovered most of its losses up to the end of 13. Now, what's happened since? In the last 18 months, we've seen property prices come down in a steady manner. No, I don't think there's cause for alarm there, but certainly by making mortgages more difficult to qualify for and making investors have a greater stakehold in the property itself, it's limited the speculators or the amount of speculation that's going on. To answer your question, Mario, in April this year, I met with the central bank and spoke to them about this very point, because particularly for first-time buyers, 25% deposit plus approximately 6-7% in fees is a big ask for most. And obviously what we want to try and do is encourage people to put down roots and contribute to the growth of Dubai and the UAE. The answer to me then was, look, we don't anticipate anything this year, 2015. It will, or it's likely to be reviewed at the end of the year. And the communication to me was, look, we are open to the idea of relaxing that, possibly for first-time buyers. But that was without any commitment, any guarantee. So look, my view as a businessman and a company owner here is I don't see any change in the immediate future. I do believe if the property market continues to meander downwards as it has done for the last 12, 18 months, then I do see some movement next year. But I don't see a huge uplift in the loan-to-value ratios changing.
No, but it's encouraging to see that they're actually listening. And, okay, if they're qualifying it to first-time buyers, I would try and say somebody who can prove maybe they're going to be an end user, maybe by showing DEWA bills or things like that, to actually prove they were going to live there.
Well, the mortgage regulation that came in was quite specific, and it differentiated between end-user properties and investor properties. So some of the banks are starting to look at that in terms of their products and how they develop their products. I do believe we should encourage people to buy their homes to live in. I think it's a good idea. But as I say, I think that the central bank is listening. What was the Emirates Banking Federation, I think they will react when the collective group of banks will speak to them about, obviously, the slowdown in their sales in their book. But look, I don't think there's any knee-jerk reactions going to happen. I think it was a calculated measure. I think the decision itself has had the right effect. The central bank understand what's happening in the market, and I think they're quite comfortable with where it is at the moment.
Okay, fair enough. Sally, I'd just like to ask you, from a legal point of view, if you were given complete free rein, what changes or additions would you make to the property market to improve transparency to property transactions?
I'd obviously like to make quite a lot of changes.
I'm sure.
We come across, I suppose I'm in the business of managing risk for my clients, so I'm acting for buyers, sellers, landlords, tenants in various sizes of deals, be it your standard residential property or be it a sub-development with a hotel and retail. So one of the first things I think I'd probably look at, probably the first thing I'd look at is access to information. So, there's this constant balance here between a desire for an increase in transparency, but a traditional culture of protection of privacy. Whether I'm acting for a seller or a buyer, one of the biggest difficulties I have is the ability to advise on the risk and what you're actually investing in. If you can't tell from my accent, I'm an Australian. Where I'm from, there are certain obligations that are placed on a seller, for example, when they're going to purchase a property. And those obligations, among other things, relate to certain disclosures that have to be made. So I can verify before I've actually decided to invest in a property that someone owns the property. I can tell roughly how much I'm going to spend to maintain that property a year. I can tell that there's no contamination that affects the property, and there are no, for example, plans in place to bulldoze the place because they need to build some infrastructure through it. Things like that, which you're not capable of finding out here until the very last second or until after you've already invested in the property. So that's one thing. Another thing, and the list could go on for quite a while, but the other thing I'll just focus on for now is a differentiation between the application of certain laws depending on the type of property you're talking about. So, for example, an easy one to talk about is the landlord and tenant law in Dubai, which applies to a residential property. It also applies to a commercial office property. It also applies to a retail property, and so forth. There are very big differences, obviously, in those markets, and in, once again, the balance of power between the landlord and the tenant in those situations. So, in my view, there are different risks. It's about risk allocation. There are different risks that should be placed, or burdens of those risks that should be placed on the parties to them. So, from my perspective, for example, there should be a different law that applies to retail leasing than there is for an office leasing than there is for a residential lease. So things like that, I think.
In the meantime, let's turn back to Lukman. Your sort of industry is forever innovating, I know, because I know you guys have meetings and you're always thinking outside the box and taking it further. So what innovations do you see in future for property portals as a whole? And how long before you think any of these futuristic things could see the light of day?
The future of property, well, different parts of the world have gone in different directions. If you look at China, the property portals have become places where transactions are done. Other parts of the world, we've seen similar trends. We haven't seen that as much in the West, and I don't think that that's going to be something that happens here. What we are seeing in the West is an increase in data to empower consumers purchasing, renting, living decisions. So I think you'll find a lot more data emerging. It's been difficult to obtain good quality data in this part of the world. That is improving. There are some good operators here and the portals, and obviously we hold a lot of data, and cleaning up that data and making it something sensible and usable is a challenge, but that's where I see the future for portals.
Good. Jean-Luc, I want your best guesstimate now. I think it's improved in terms of numbers, but I think still the majority of deals are being done by cash transactions. Is it going to grow much next year, especially if the bank is going to help first-time buyers? What's your best guesstimate?
I think it has. I mean, some of the historical data that we've seen in the market previously is based on kind of pre-2008, 2009, where the market was extremely cash orientated in terms of most of the transactions. 70, 80% of transactions were cash. And obviously, with a huge under-construction market at the time, 10%, 20% down payments, etc., a lot of that data has kind of mixed the numbers, so to speak. Following the correction in the market, we saw a shift from investors. The smart investors left, as they did with most property markets around the world. And what we then saw as the market started to recover, it was predominantly led by end users. People who said they'd weathered the storm, they'd seen that their jobs were now safe, or they weathered the cull. And their views were, well, back home isn't very much better, or it's probably worse. And Dubai and the UAE is a good place to stay long term. And then we started seeing people actually starting to buy family homes. Now, obviously, what we've seen over the last 5-6 years is interest rates have dropped significantly. In the early years, the market was dominated by two major local lenders who today aren't really in operation. Interest rates peaked at approximately 8% average, and now today we've got rates below 3%. So in terms of what the banks are offering, the banks are hungry right now. There's it's about 34 banks in the market that are actually lending on UAE real estate. And that's compared to, there were probably 4 after the market had started to move downwards.
Massive growth there.
Yeah. So there's significantly more players, and obviously there's less transactions. So there's hunger there, there's desire there from the banks to lend. As I said, the pricing has come down significantly. I do think with US dollar interest rates likely to rise towards the end of the year, I do see that we'll see something like the bottom of the interest rate cycle here. And, you know, even 3-month EBOR, as an example, just in recent weeks has started to creep up slightly. So
you think we're going to get interest rate rises then?
I think we will. I don't think it will spiral out of control. I think there will be measured, steady rises over the next year or two. But likewise, I'll see the banks, you know, like we talked about innovation here. You know, people need to understand that the mortgage market here is 15 years old for expats. Products are still fairly vanilla. What I mean by vanilla, you know, capital interest, there's Islamic mortgages, typically over 25 years. There's not a great deal of variation that you would have in some of the more mature property markets. But in terms of products, you know, they are governed by the central bank. The central bank does have the framework that people have got to adhere to. The central bank regulation is a guideline, and what we want to see is that banks actually think outside the box and actually create better value products. But in terms of where the market is today versus the last 15 years, mortgage products are the best they have been, and you know, with lower property prices, anybody thinking of staying for 3 to 5 years beyond, then buying real estate in the Dubai and the UAE represents a good opportunity, in my opinion.
So you think next year will be good for us then?
I think so. I think what would, you know, obviously the official handover of the expo is later this year, and I think there'll be some big razzmatazz behind that. And what I see is I don't see prices kind of, you know, jumping back up or spiking. I do see a stabilization towards the end of the year, probably Q1 next year.
Good. Go ahead.
Well, regarding Joe Luke's point that the interest rates will start probably increasing next year, I think even the Fed is grappling with when does it start raising rates. But this is the best time for mortgage buyers to start buying. People who have been sitting on the threshold, who've been waiting for, is this the bottom of the market? Nobody can know the bottom of the market. I think we have definitely reached the bottom and we are going to start moving up quite nicely. It may not be 20% in a year as we've seen in the past, but a steady 8-10% annually is going to happen. But for the people who are end users and wanting to buy on finance, you all need to look at the fact that if the mortgage rates start increasing, which is going to likely to happen if Fed starts raising it, this is the best time to start buying. Number one. The second point that I have is actually a question for Jean-Luc, which is, I see the banking industry, with all due respect to any bankers in the room, not very sophisticated in UAE and in the Gulf in general. And I see that they don't look at the customer as being the most important part of the equation. This is extremely bad. As a customer, I've seen this several times with bankers. And I think they need to, look at not increasing their rates disproportionately to the rates in the global environment. I know LIBOR is basically the benchmark, but 8%, for example, I don't think internationally rates were at 6 or 7 at that time. So why did it ever reach 8%? But that's history. At least now, if in 2016 it starts going up, is there a central bank guideline that they cannot go beyond a certain threshold? And B, how exactly do we get the bankers, just like we want the brokerage community and the owners and everybody else to contribute towards improving the market, how does the banking segment come into the picture?
Okay, a couple of good points there, Kalpesh. And just to deal with the first one, in terms of the regulation of the banks, a lot of people hear about the mortgage cap and the lowering of the maximum loans, but the mortgage regulation was a 16-odd page document, which I think has changed the market significantly. First and foremost, the most important point in that documentation, that regulation, was the central bank have now imposed a maximum exit fee that the banks can charge a client for exiting and moving his mortgage or their mortgage to another bank. So that's a massive step forward, because in the past, in the early days, for some of you who've been here a while, you'd enter into a mortgage contract and you'd be tied to the mortgage contract. There'd be a 4 or 5% exit fee. So 2 million mortgage, 100,000 dirhams to move your mortgage. That was prohibitive in terms of the opportunity to look elsewhere for better value. Today, And the banks have all applied this retrospectively. So, that's excellent. The maximum exit fee a bank can charge is 1% of the repaid loan amount, maximum 10,000 dirhams. So that in itself is a lot more customer friendly. The regulation also talks about that the banks are not allowed to change the terms and conditions of their contract, which was commonplace in years gone by. So, and again, touching on low interest rates, more regulation, and from the speaker previously, education is the other piece. Education now, just to touch on what the mortgage market is doing as such. Real estate, obviously the regulation of real estate, the increase of the pass mark for the Real Estate Regulatory Authority certificate. The Dubai Real Estate Institute have also introduced a certified mortgage broker certificate. And with this, it's the same kind of format in terms of 2-day course plus a certification. Now, that's applying for independent advisors of mortgages in the country. The next step for me is the banks, for the banks to have a certificate, because it's a common trend, and what I hear a lot is because if you have a banker who's selling a mortgage, there are good and bad in every industry, as we know, and some will be economical with the truth in terms of what they talk about their product. If you've only got one product to sell, if you work for ABC Bank, then you're going to promote the features and the benefits of that product, but you may not necessarily discuss all the terms and conditions. Independent mortgage consultants, they do that because they have access to every bank. So if you don't like that product, they may choose another product. Now, obviously, from my perspective, the first stage is the independent mortgage market. The next stage is the bank. I would like to see a certification for bank mortgage personnel to pass to ensure that there's full disclosure of their products. Because a lot of the people that I speak to that have gripes about the industry, I wouldn't buy in Dubai, or I've had my fingers burned, predominantly a lot of that is related to their lack of understanding of the product they bought. Now, with greater transparency and better regulation to protect the consumer, I think you'll see less instances where that happens.
Okay, yeah.
When it comes to sustainability, when we talk about the value of the properties going up and down throughout the years, when I get calls from evaluators, what I understand, they rate the property according to what 5-10 brokers say what they have sold the last property at. And that's going up and down with the market. To reach sustainability, or what everybody is previewing in the market, that prices will the volatility will slow down and it will become more a mature market. What do you see, Jean-Luc, in the way of how to provide, apart from market value, to evaluate the property also from what it is, from its quality, from let's say for the value of the real value of the property? Because what I see, mostly it's evaluated according to what the market is saying.
As everybody's kind of echoed today, the market is maturing, is developing at a pace. Obviously, in the early stages, there were only a handful of valuers going around the market, and typically one of the mechanisms or parts of their process of valuing properties was ringing the estate agent. Have you sold one of these recently, and how much did you sell it for? As Luqman was saying, from a data perspective, there is more data being collated now. Now, with some of the companies who are in the market who provide this data, historically, some of this data was old data. So if you look at what goes through the land department, most of these transactions were signed 2 to 3 months beforehand. And in a moving market, the prices that have completed may not be the prices today. So going forward, there's one particular agency or company of valuers who actually take data from across the biggest real estate companies in the market, also ourselves as one of the biggest mortgage companies in the market. And the data they collect is not just on completed transactions, it's also on valuations from the banks, and it's also on transactions at signing of the contract stage. So I think that gives you a better blended valuation than somebody just basing it on historical data of what's gone through the land department.
Since morning, we heard where the market is and where it was, but we are not hearing where it will be. So how you are repositioning your company and your focus for what's happening next and what you see will happen next?
What you mean, like next year or?
Next month.
Next month, okay.
And the next 3 months and the next 6 months?
Yeah.
Zara?
I think, I was here for the previous segment and also listening to what we're discussing today. I look out into the audience, I see a lot of faces that I know in the market that have been here for a long time. I've certainly been in the industry for the last 15 years, and some of the words that have been repeated today have been, your innovation, your change, sentiment-driven market, lack of maturity in the market. We are evolving, and I think that's what everyone needs to appreciate. And trust me, as a company and a brokerage owner, I am as frustrated as anybody else in the market, whether it be in any of our segments. But we need to, and I think the point that we mentioned earlier with regards to people can either embrace this as a career and either take it seriously. I think we're seeing less and less young people come in and trying to make a quick buck. But ultimately, it's an industry that we need to embrace, but we also need to have some patience with. In 2002, and I joined the industry in the year 2000, so ultimately it went through such an enormous growth pattern that regulation wasn't put in place at the beginning. And you've got authorities and industry leaders that are trying to make changes now after years of operation. And I think that when you're trying to change something rather than set those boundaries right at the very beginning is always going to be more of a challenge. I think I was actually at a meeting that was held by RERA when they were launching the categorisation of agents. And one of the main points that came up there, because RERA sort of said that they would like to be encouraging more international investors, they would like to be encouraging more outside buyers. And, one of the points that was brought up was because it was very much around the time that they were restricting brokers to act as power of attorneys. And, there was a discussion and there were points that were being taken down and also points that are still, I know, being followed up by RERA now about potentially changing that, where they might look at allowing power of attorneys to go to agents for a buying purpose but not for a selling purpose. So ultimately, for any of you that have been involved in any of the off-plan launches, and certainly my team were at 5 alone last week. There's a lot of new properties that are coming on board, but equally are those overseas investors that we all want to encourage and we all want a slice of that cake going to want to come into Dubai, potentially queue since 4 o'clock in the morning and then reach the front of the queue and then be told that it's been sold out. I'm sorry, but that is not a way to do business in my eyes. So, things like that need to change, but I think that they are listening. And it's not only RERA, it's the banks, it's the marketing companies. It's, people are listening and people are collaborating to try and improve. And it's the brokers, amongst themselves that are also trying to work together to get a better industry. But we need to understand it is as vulnerable as it is dynamic. I think we also need to understand that we are in a industry and a country of change and infancy. And, we need to have some patience. However, you also need to choose, do you actually want to be part of this exciting journey, or do you not want to be part of that? Because it is still a journey. I'm certainly tiring of it some days, but it is still a journey that's evolving. So, I don't know if I answered the question, but I shared my views on it.
Perfect. Okay, over there. Microphone. Yeah, down here.
Every investor who comes to our office, he asks where to invest. So what do you think from the financial and market research, brokerage and legal side? Where would you recommend to invest today?
Which communities is that we're in?
Which location? What would be the investment structure? And financial option, and minimizing the legal risk.
Wow.
It could be
Let's
very
go to the
helpful.
broker. Come on.
Sorry, I didn't quite pick up every
She wants
word
to-
there, but I think were you talking about how do you...
It's a very simple question which every investor asks. Like, as per today, well, Emilia, please advise me, where should I invest?
Okay.
And what are the options?
Got you. So I think this comes down to, again, some of the points that were raised earlier. It comes down to the training and the quality of the agents. It's our jobs, I'm sorry, to qualify our buyers and our investors. It's our jobs to actually qualify every phone call that comes into our office, or any lead that comes into our office. So in that qualification of that client, you need to be identifying, are they risk adverse, or, what is the finances that they have available? For example, are they a first-time buyer in Dubai? What is their long, short-term goals? Those are all things that you need to be establishing. I don't think it's about area. I'm sorry, but I've transacted in many good deals, whether it be in Dubai Marina, Jumeirah Village, Jumeirah Golf Estates, and all very different pockets and all very different budgets. But it all comes down to the requirements of your client. But again, it comes down to the position of the agent.
Let's assume he is a first-time buyer in Dubai and he's investor. He comes to Dubai and he says, wow, amazing city. I want to invest. Please advise me, what should I do with my money? So I'm just would like to take an opportunity
Okay, so
to
does
ask
he
you
have
the
cash, or is it
Can I just say,
finance?
I mean,
Cash.
that's a very,
what
very...
are the financial options as well? I would like to know.
Miss, that's a very sort of open question and can go on forever. What I suggest is you speak to Zara afterwards, and in fact, come and see me, because I can give you some very good tips as regards to where to put your money. And I'll explain that later on anyway. Ladies and gentlemen, listen, I'm sorry, we've actually run out of time. We started off a bit slowly, but I'm afraid we are on a time limit. So I would just like to say thank you very much to Sally, to Zara, to Jean-Luc, and obviously to Lukman for being here today. So give them a big round of applause.